afternoon, Madam President, members of the board. I'm Ivory Li from Piper Jaffray. Thank you for letting me be here. As the district's bond underwriter and program manager, I wanted to bring to your attention an opportunity for the district to refinance the portion of the Measure H bonds and generate a significant amount of savings for the local taxpayers. And does everyone have a copy of the presentation?
Small, very small.
Very small. Well, I have hard copies if you would like. So just to give you a recap of the Measure H bond program, it was approved by voters in November of 2002 with very strong voter support. The program size was $131 million in total. All of the bonds have been issued in 4 different series. And in 2005, the district actually was in a similar situation where interest rates were relatively low, and so the district took advantage of the lower interest rates and refinanced a portion of the Series A bonds. So right now we have Series B issued in 2006, Series C and D issued in 2009. So a nice basket of bonds to select from to refinance. At the time of the election, the estimated tax rate that was shared with the voters was $19.83 per 100,000 of the assessed valuation. So on page 2, I thought it might be interesting for you to see how the actual tax rates have been since the inception of the Measure H program. And the average tax rate has been actually $19.58 as compared to the $19.83. So on average, slightly lower. In the recent years, because of the state of the economy and the real estate market situation, the tax rates have been a little bit higher. So onto the bond refinancing opportunity itself. Similar to refinancing a home mortgage, a bond refinancing is where we replace the higher interest rates on the old bonds with the lower interest rates on the new bonds. So the average interest rate in this particular selection of bonds we're looking at was about 5.16%. In the current market, we can replace those interest rates with an average interest rate of close to 3%. A couple things to point out. One is that the bond refinancing would not extend the term of the old bonds. So if the old bonds were to mature in 2030, the new bonds would mature in 2030 as well. So there's no lengthening of the old bonds. Another thing is all of the transaction costs are contingent upon the successful completion of the refinancing. So if for some reason the district decided not to move forward, or if the market conditions are not there, the refinancing doesn't get done, there will be no cost incurred by the district. All of the transaction costs actually will be paid from the proceeds of the new bonds, so that there will be no impact, no fiscal impact in terms of the district's general fund. Right now we have about 40 to 60 million of bonds that are eligible to be refinanced, and the estimated total savings for the local taxpayers falls into the range of between $500,000 to $2.5 million. The market has been pretty volatile in the past couple weeks. The month of June had been particularly very painful for a lot of municipal underwriters and traders. I remember when I first brought this opportunity to Al's attention in May, and to the superintendent's attention, I think the estimated savings at that time was somewhere between $3 to $4 million. So, some of the market forces have been moving in the wrong direction, as you can see in the next chart. So on page 4, we have a chart of the historical interest rates for municipal bonds since the issuance of 2005 bonds. And as you can see, on the right hand of the chart, interest rates really have been moving up higher in the past month or so. But from a historical perspective, they're still at pretty low levels. And as compared to the 2005 and the 2006 and 2009 bonds, they are below what they had been originally. On page 5 is sort of a sample snapshot of the debt service comparison and estimated savings. Again, another to point out, we're not extending the original term of the old bonds. They mature in 2030, and the new bonds would mature in 2030. And this is what sort of the savings would look like at the current level, at $1.25 million or so. We took the liberty to include a sample press release, and we've done this for a couple of the other community colleges in the local area. If we were successful in the bond refinancing and generating significant amount of savings for the local taxpayers, this would be a sample press release if the district would like to share with the local community. A couple of things to emphasize is that from the bond refinancing, the district we're not getting any additional funds for your construction projects. So really this is a return of the goodwill for the support that the local community has shown for Measure H bond program.
I have one quick question.
Sure.
In the end, will this decrease the cost to our community?
Yes.
By how much?
It depends on market conditions. So currently it's about $1.25 million.